This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. Obviously, stocks continue to hit new highs, and there are some red-hot areas. We've seen that FANG has been on fire. That's the social media tech giants, as well as the semiconductors. The iShares Semiconductors ETF, the SOXX, is up 44% over the last 52 weeks and 32% year to date. That's been one of the hottest areas. So I began to wonder, is there any value in the tech sector right now? That's a big question, right? And so I ran a basic screen for PEs under 15, which is what I like to use to find value. And then I looked in the computer and technology sector. Did you know that you can screen by sector as well as industry? That's very helpful, actually, especially this when you want to search out a certain area. And the sectors are broader. Here at Zacks, we use 18 sectors. I'm pretty sure the S&P also uses the 18. So they use either 17 or 18. So that's a little bit easier. If I searched by industries, which I initially did to think, oh, maybe I'll just search by industry and look and pick out the tech industries. There's 265 industries, and I just scrolled through and I was looking at the semiconductors, and those are complicated enough as it is to figure out what it is, they're doing. But there were like 8 different industries in the semiconductors alone. So I was like, need to do the sectors. And that worked, actually. So I looked for Ps under 15, and I did the computer and tech sector, and I got 18 stocks. Now, I didn't screen for the Zacks rank. I just wanted to get some cheap stocks, and then I figured, I'd look at the rank afterwards. And it would have been a lot more narrow if I had included the rank on these. And I was also just curious how many stocks overall are there with PEs under 15, not just in the tech sector, without screening for anything else, just the PE. And I got 992. So it's more than you think, but they're just not in the computer and tech area. So this kind of confirms what I thought, that computer and technology is, obviously one of the hottest areas. And people are buying it mainly for the growth story, not the value story. But we did get 18 stocks. And some of them are names that we've heard of and we've talked about in the past on the Value Investor Podcast. And I'm going to talk about them again today. Many of them are, kind of boring. You're like, meh, when you see the list, because it's not giving you those glamour, big cap names you associate with technology right now. But sometimes boring is good, as I've said before. And if you want cheap stocks during a rally like we're having here in 2017, during one of these big kind of go for the gusto type rallies, then they certainly are going to be value stocks that are out of favor for some reason. Either it's because something's going on at the company, or it's in a sector that's just out of favor, like retail. That's not true of technology, but it would be of the retail stocks, for instance. Or it's, a foreign company or very small cap, even a micro cap that's very, not well known and hardly covered by the analysts. I always bring up a stock that I own in the value investor portfolio, and I've owned it for a while. It's a semiconductor called Vishay Technology. The ticker is VSH. This isn't one of the stocks I'm about to give you, actually, but it's not widely covered. And I think it's only like 1 or 2 analysts on it. It's based in Pennsylvania, even though it's been around for a couple decades. So nobody really knows about it. Only just recently, Jim Cramer mentioned it on his show on CNBC. And then it got a little bit of love. But before that, they were reporting, they were beating the estimates. The story looked good and the stock was going nowhere. So you're going to see a lot of that on the value side. And as a value investor, you just kind of have to be patient. You have to know that you researched the fundamentals and you liked everything you saw with the company. And that's why you're owning it. You're not going with the crowd. You have to be willing to buck the trends if you're a value investor. And that's true of the next 5 stocks I'm about to give you. So I did narrow the 18 down to 5 that I thought were kind of interesting. And some of them, you'll have to do a little bit more research, I think, because some of them have kind of interesting stories. So the first stock is called KT Corporation, and the ticker is KT. That one used to be called Korea Telecom. So yeah, it's a telecom. I know most people don't like those. It does pay a dividend yielding 2.5%. Has a $6 billion market cap. And yes, it's in South Korea. So you can see why this might be kind of out of favor right now. I shouldn't laugh, but it is kind of risky buying a telecom. Like when everything is going on over in the Korean Peninsula right now, it has a P of just 9.7. Its price to book is 0.6, and its price to sales ratio is just 0.3. So it has all the classic value fundamentals, but there is a reason, and it is trading near its lows as well. It's 52-week lows. So this was the first landline company over in South Korea, and it's something you would have to investigate a little bit more. But if you're into a little bit more risk and you're willing to go there, then this is one you should be investigating. Okay, the second stock is called Meet Me, and that ticker is MEET. Some of you may know this. They're based in Pennsylvania. This is a small cap. They're only 262 million market cap. It's under $5. I know you all like that. It's trading a little under $4, actually. It has a PE of 12.8. Price to book ratio is 1.1, so that's good too. Its price to sales a little bit higher, 2.8, but profit is expected, its earnings expected to be down 16% this year and then rebounding into next year by 23%. So I'm not sure what's going on there and why the earnings are down so much this year. It doesn't pay a dividend. And so you need to investigate that. But this is a social media app. It's like a chat room kind of app. So, that's in an area that a lot of people find interesting, but this is a small player. So you really need to dig down a little bit deeper into why it's under $5 and why the earnings are down, but it is expected to be profitable, which is why we have the PE. So there's that. Our third stock is one we have talked about in the past. It's mega cap, 46 billion market cap, Micron Technologies, which is ticker MU. This is in the semi side. And I've talked about them in the past because they're dirt cheap. The PE right now is just 5.6. They have a price to book ratio of 2.3, which I also like because that's under the 3 that I look for. And the price to sales is 2.4, which isn't too bad either. They are killing it on earnings growth, revenue, sales, all of this stuff. Earnings expected to be up this coming fiscal year, which they're just starting right now. So they're in the first quarter of fiscal 2018 now, up 50%. And then by next fiscal year, which is starting at the end of next year, the analysts are a little bit uncertain if this cycle in the semiconductors can continue. So they are showing it down 19%. So you do have to ask yourself, is this a value trap here? Or is it just a good cheap stock? Well, it's only a value trap if those earnings start to decline. Right now, it's not happening. And right now, they're saying the demand is still going to be there through 2018. So if you believe them, then this is a cheap stock. Now, the semis are also the number one industry out of the 265 industries that we track here at Zacks. So it still continues to be hot. And there are some cheap deals in there, like Micron. And then I mentioned Vishay early on, which isn't one of these 5, because it's a little bit pricier now than the PE under 15, but it's still like a pretty attractive valuation. So that's also in the semis. And then we have Western Digital, which is the hard disk storage maker. The ticker is WDC. And they've been cheap for a couple of years, I want to say. They have a PE of 7.4. The price to book is 2.2, which again is under the 3 I look for. Price to sales isn't bad either. It's just 1.3, so a little bit above the really cheap level for price to sales. They haven't reported yet. They're coming at the end of the month, so it'll be interesting to see what they say. Dividend is 2.3%, and they've been generating a lot of cash. They always had a couple $1 billion cash on hand over there at Western Digital. So this is one you might want to watch on the earnings report and kind of see what's going on. But the shares have lagged. They've always kind of lagged. So that is definitely showing that they're out of favor. And then our fourth stock is called J2 Global. And I know I've talked about them on prior episodes too. The ticker there is JCOM, JCOM, and they're kind of a hybrid. They do cloud-based communications like cloud-based email and faxes, but they also own a bunch of websites. So they're on the digital media side with geek.com, PC Magazine, AskMen, and one of their big acquisitions recently, Everyday Health. I also own this one in the value investor portfolio. So their PE is still really attractive. It's at 13.8. Their price to book's a little bit pricier, 3.8, and then they have a price to sales ratio of 3.7. They have a market cap of $3.7 billion, so they're kind of mid-cap range, not real big though, and they do pay a dividend, 2.1%, so that's a little unusual for a company of this size to pay a nice dividend. But those shares are down off the highs too. People unclear what's happening, I think, on the digital media side there. And then our fifth stock is Real Microcap. I had to look them up. I've never heard of them before. And we only have one analyst on them. It's IEC Electronics. The ticker is IEC, 50 million market cap. Like I said, it is a $5 stock, which I know you like. A little bit weirdness with the data, I have to say. They are only expected to make 8 cents a share this year. They made 47 cents last year. So I'm not sure what's going on there. And they're supposed to make 66 cents next fiscal year. So something either has gone on or something is a little amiss in the data. Not sure. But they've been around a while. IEC was founded in 1966. They're a New York-based company. They help customers manufacture complex devices, is what I can gather from their website. So they do medical devices, aerospace and defense, and industrial. So on the industrial side, some examples would be like locomotive tracking, railway signaling, weather detection. On the aerospace side, they do secured cockpit encryption systems, things like that. So they're kind of a little more complex and detailed manufacturing on behalf of their customers, it looks like. They trade with a 28,000 share a day volume, which isn't awful for a small cap. But again, you're going to get real volatility with one like this. And you're really going to want to listen to the conference call and scope out any press releases or anything to find out kind of what they do, because it's very, very lightly covered on Wall Street. I'm actually kind of surprised there's even one analyst on it, but there is. So it's kind of an intriguing proposition. As value investors, we like to find companies that very few people know about and know what's going on with them and get them at these low valuations, which all of these are. I know very few people have heard of J2 Global. They're actually in Los Angeles. And obviously, I'd never heard of IEC Electronics in New York. And while some of these others are bigger names, I don't think most people are aware of KT Corporation in South Korea or Meet Me unless they use that app. Then they might be aware of it. So these are just some of the opportunities that are out there in technology. And as I said, the ranks on here, I did not screen for them. The ranks actually turned out not to be that bad. Meet Me is a number 4 sell right now, but that's because they haven't reported earnings yet. And then we had that EPS decline this year. So that's giving them the number 4, but that may change on the earnings. And Western Digital, also a number 4, but that's right ahead of its earnings report as well. So nobody's a 5, and those are the only 2 4s, which is the sell. So, and then Micron, they've got the number 1 rank, as you might imagine, because that outstanding earnings report that they just gave, and number 1 industry on the Zacks rank industry. So let's recap some of the tickers again. I mentioned Vishay in the beginning. VSH is that one. They're in the semis, but the real cheap ones in the technology, KT Corp, KT, Meet Me, which is the app, Meet, MEET is the ticker. Micron is MU, Western Digital, WDC, J2 Global, JCOM, and IEC Electronics, IEC. And I'm always out there digging for new value stocks. I know some of you have had some questions on the medical area, medical devices, healthcare. Is there any value over there with the biotech index raging higher? I've been looking around over there. So I'm going to have a future show on value over in healthcare and medical biotech stocks. So be sure to listen on that. It might be on the Zacks Market Edge, though. I might bring in some experts here at Zacks who know more about the medical side than I do. But I'm going to be covering that. And as always, I'm going to be looking for value stocks throughout this earnings season, because a lot of things can change when those earnings estimates, hopefully move higher. A lot of people, I hope, are going to be guiding higher for the end of this year and into next year. So that's something that we'll be keeping an eye on here at the Value Investor Podcast. And you can always subscribe to get all of our episodes over on Apple Podcasts. Definitely subscribe there. And you can also subscribe on SoundCloud, where you'll get both the Market Edge and the Value Investor Podcast over there. So until next time, I'll see you then.